Hello, trade pros, and welcome to lesson 2 of order flow basics, understanding order flow. This is Sarah from Trade Pro Academy, and before we get started, let's play that intro. So today's agenda, we're going to talk about unusual options activity, option interest versus volume, time and spot price, dark pools and share activity. And if you can hit that like and subscribe button, you will get all of our new videos and lessons, and you'll get lesson 3. And with that being said, let's continue with lesson 2. So what does unusual options activity mean? So options activity is considered unusual when specific option contracts are trading with a high amount of volume in comparison to that contract's average daily volume. So unusual options activity is particularly significant when reading order flow. If a ticker has an unusual amount of calls or puts being bought in comparison to average daily volume, it could mean that something is going to happen with that ticker. So I really like to focus on unusual options activity. It's a big part of my trading plan. Essentially, in a way, you're looking for almost or just short of insider trading. So it is pretty significant. You can sometimes detect earnings beats and misses using unusual options activity. So it is important to incorporate into your trading plan. So identifying unusual options activity and using it. So many order flow programs have a specific function that allows you to view unusual options activity for that day. However, there is specific data that we should pay attention to. Repeat sweeps coming in. So if a specific contract for a ticker or expiry is getting more volume than usual, something could be up with that name. Put versus call ratio. So an unusual put-call ratio indicates a directional bias amongst traders. It indicates probable future direction and price of the underlying. Growing open interest. So growing open interest indicates that volume is still coming in for that contract, and meaning it's most likely not too late to get in. And then volume exceeding open interest. So this implies that the move has yet to happen. And there's more on this on the next slide. And an unusual ticker. So if a ticker that isn't considered popular is getting volume, there could be something up with it. And catalyst. So for example, if a lot of puts are coming in for a stock with an earnings report coming up, it could indicate future movement of the stock after the company reports. So open interest versus volume. So both open interest and volume are extremely important when it comes to reading order flow. Open interest tells us how many contracts are active, whereas volume tells us how many contracts are being traded in a current period. So open interest, as most of you probably already know, is updated the next trading day, whereas volume is updated in real time. So when reading order flow, we should be more focused on volume than open interest, and there are a number of reasons why. So when volume exceeds open interest, it's telling us that the big move has yet to happen and that we're not chasing a trade. This means that there hasn't been an increase in implied volatility or the Greeks. So we are getting a fair price for our contract. So when open interest exceeds volume, that usually means that the big move is in the process of happening and it may be too late to enter. However, this isn't always the case. So this is why you always want volume to exceed open interest. You want to get in before the move happens so you can get the most for your contract when you do sell it. So when both open interest and volume are growing, it can mean that the underlying is in the process of moving and will continue to move in that direction. Okay, equity blocks and dark pools. So a dark pool order is a share transaction that has taken place on a private exchange that institutional investors use to trade large quantities without revealing their identity. The pricing of securities on public exchanges can become compromised when a large order hits the open market. Orders executed on dark pool exchanges will allow the institutional trader to realize a desirable price for the trade without worrying about having to pay a premium to the market. So dark pools are especially important when it comes to reading order flow for various reasons. Dark pools can help you predict the future movement in the underlying security by determining if the order took place above or below resistance or above and below support. It's also important to determine if the order took place at the bid or the ask. Now, most programs that are available to retail that do track dark pools, they don't show you if things were at the bid or the ask, they just show you the spot price. However, Trade Alert, which is the program I'm using to do my series, What Institutions Don't Want You to Know, you can see if the order took place at the bid or at the ask. So using Trade Alert for dark pools is a really big advantage. Also, unless you have advanced order flow software like Trade Alert, dark pool orders are delayed on retail platforms, and they're usually by roughly 20 minutes or so. Late signature orders are share orders that took place the prior day. These orders are usually executed by institutions overseas and don't hit the tape until the next day. Also, institutions frequently use options to hedge their primary position, which is often a large share or dark pool position. Keeping this in mind will allow you to capitalize on market moves by closely monitoring dark pool prints in addition to options order flow. However, dark pools can also be hedges if their main position is in options. So here we are seeing the spot price of where a large Netflix dark pool order took place. As you can see, it was when Netflix was trading at $4.83 a share. And shortly after, we saw Netflix rally, so we knew that that was likely a buy. It was also bought under support and eventually broke support and hit a high of $4.89. So following order flow with shares. If you don't trade options, you can also use order flow to follow orders with shares, as long as you know how to read it. So if you're seeing repeat put sweeps being bought, that would indicate that it's time to consider cashing in your shares. If you're seeing repeat calls being bought, that would indicate that it's time to buy, or if you're already holding those shares, average into your position. So identifying equity blocks and dark pools as buying and selling is also very useful when trading with shares. That's because equity blocks and dark pools are shares as well. So you don't really have to worry about the Greeks, just more so the spot price. So that's the end of lesson 2. Hit that like and subscribe button if you haven't already. Follow TradePro Flow on Twitter for real-time order flow alerts. It's my real-time order flow Twitter page, completely free. And you can trade with us live every day at community.tradeproacademy.com. Hope to see you all there, guys, and see you in lesson 3.